Do you ever hear people say, invest in stocks, and wonder, what exactly are stocks and how do they actually work? Here's the truth. Stocks are one of the simplest but most powerful tools to build wealth, yet most people never truly understand them. So in this video, I'm going to break down what stocks really are, how they work, and why they're the secret weapon of the rich. By the end, you'll know exactly how to use stocks to start building financial freedom for yourself. This is Official Finance Clarity, Finance Made Simple, Wealth Made Possible. Section 1. What is a stock? Let's start with the basics. A stock represents ownership in a company. Think of it like a pizza. The whole company is the pizza, and each stock is a slice. When you buy a stock, you own one slice of that company. If Apple has 1 billion shares, and you own 10 of them, you are technically a part owner of Apple. You have a real stake in the business, even if it's tiny. That means when the company grows and makes money, you benefit as a shareholder. Section 2. How do stocks make you money? There are two main ways stocks can make you rich. Capital gains. When a company grows, the value of your stock goes up. If you bought Amazon at $100 and it goes to $300, you just tripled your money. Dividends. Some companies share their profits directly with shareholders. Coca-Cola, for example, pays dividends every quarter. That's money in your pocket just for owning the stock. This is why stocks are so powerful. They allow you to share in the success of the biggest companies in the world. Section 3. Why do companies issue stocks? Now you might wonder, why do companies even sell stocks? Simple, companies issue stocks to raise money. For example, when Tesla needs billions to build new factories, instead of borrowing all that money, they can sell shares of their company to investors. In return, investors get ownership. It's a win-win. The company gets money to grow, and you get a chance to own a piece of the business. Section 4. Where do you buy stocks? Stocks are traded on stock exchanges like the New York Stock Exchange, NYSE, or NASDAQ. You don't need to go there in person today. All you need is a brokerage app like Fidelity, Vanguard, Robinhood, or Charles Schwab. You open an account, deposit money, and you can buy or sell stocks with just a few clicks. It's that simple. Section 5. Types of stocks. Not all stocks are the same. Here are the major categories. Growth stocks, fast-growing companies like Tesla or Amazon. They usually don't pay dividends but can grow quickly. Dividend stocks, big stable companies like Coca-Cola that pay regular cash to shareholders. Value stocks, companies that trade for less than they're worth. Think Warren Buffett style. Index funds, ETFs, a basket of stocks grouped together. For example, the S&P 500 Index Fund includes the top 500 U.S. companies. These are great for beginners because they give you instant diversification. Section 6. How stock prices change. Stock prices move up and down based on supply and demand. If millions of investors believe Apple will keep making great products, more people want to buy the stock, and the price goes up. If bad news comes out, like weak earnings or a scandal, people sell, and the price drops. In the short term, stock prices can be unpredictable. But over the long term, stock prices reflect the company's actual performance and growth. Section 7. The power of compounding. This is the part most people underestimate. If you invest $500 a month into stocks earning an average of 8% a year, in 30 years you'll have over $750,000. That's the magic of compounding. Your money makes money, and then that money makes more money. The earlier you start, the richer you'll be. Section 8. Common mistakes beginners make. Before you jump in, here are the mistakes to avoid. Chasing hot stocks because of hype. Day trading without experience. Putting all your money in one stock, selling too quickly when the market dips. Remember, investing is a marathon, not a sprint. Wealth comes from patience and consistency. Section 9. How to start investing today. Here's how to get started right now. Open a brokerage account. Start small. Even $10 is enough. Invest in index funds if you don't want to pick individual stocks. Set up automatic contributions every month. Focus on the long term. It's not about timing the market. It's about time in the market. So now you know, stocks aren't some mysterious Wall Street game. They readjust ownership in businesses, and they one of the greatest wealth-building tools in history. If you found this helpful, hit that like button. Subscribe to Official Finance Clarity and ring the bell so you don't miss more financial clarity every day. And let me know in the comments. What was the very first stock you ever bought, or which one would you like to own first? Remember, finance made simple, wealth made possible. See you in the next video.